BYD just hired a Canadian automotive consultancy to find 20 dealership locations across the country. 3 spots in the Greater Toronto area are already under discussion. Here's everything that's changed since our last update and what it means for Canadian car prices. The timeline has accelerated since we last covered this. BYD's Canadian market entry is no longer a maybe. Dealership site selection is actively underway. The consultancy is scouting locations in Toronto, Vancouver, Montreal, and Calgary, with Toronto as the priority market. Demo vehicles are being shipped to potential dealer partners in Quebec and British Columbia, where EV adoption rates are the highest in the country. Pilot retail programs are expected in those provinces first, with broader Ontario rollout following in early 2027. The tariff structure is locked in. Canada's tariff on Chinese-built EVs dropped from 100% to 6.1% in January 2026. The first-year quota allows 49,000 Chinese-made EVs from all manufacturers combined. A second window opens later in 2026 for another 24,500 units. By 2030, the annual cap rises to 70,000. BYD, Chery Polestar, and any other Chinese manufacturer all compete for the same quota on a first-come, first-served basis. Now here's what's changed on pricing. Tesla just undercut the entire market by importing Chinese-built Model 3s at $39,490. That's the cheapest Tesla ever sold in Canada. It also means Tesla is competing for the same 49,000 unit quota as BYD. Every Chinese-built Tesla shipped to Canada is one fewer import permit available for BYD. This creates an interesting dynamic. Tesla has the brand recognition and the existing dealer network to move units quickly. BYD has the pricing advantage and the broader model lineup. But the quota means both are fighting over limited import permits. In Australia, where the tariff structure is nearly identical, BYD sells the Dolphin for roughly 31,000 Canadian, the ATTO 3 for roughly 42,000, the Seal for roughly 49,000. Canadian pricing is expected to be similar. But here's the key development most people haven't caught. None of these Chinese-built vehicles qualify for Canada's new Electric Vehicle Affordability Program. The EVAP offers up to $5,000 off eligible vehicles priced under $50,000, but only for vehicles manufactured in free trade partner countries. China is not a free trade partner. Meanwhile, the United States now faces a 25% tariff on vehicles exported to Canada. So neither Chinese-built nor American-built EVs get the rebate. The vehicles that do qualify are Korean-built Hyundais and Kias, Canadian and Mexican-built GM and Ford models, and Japanese-built vehicles from Toyota and Honda. This creates a bizarre competitive landscape. The cheapest EVs in Canada won't get the rebate, and the EVs that get the rebate are more expensive. Despite this, BYD's pricing still undercuts the competition. A BYD Dolphin at $31,000 with no rebate is still cheaper than a Kia EV4 at $39,000 with a $5,000 rebate. The math works in BYD's favor, even without government help. BYD is also reportedly considering building a manufacturing facility in Canada or acquiring an existing automaker's production line. If that happens, it would change everything. A Canadian-built BYD would qualify for the EVAP rebate, avoid the 6.1% tariff entirely, and have no quota limitations. That would make BYD the most price-competitive EV manufacturer in the country by a massive margin. No timeline has been confirmed on this, but the fact that it's being discussed tells you BYD sees Canada as a long-term market, not a short-term experiment. The used car market is also feeling the pressure already. Used EV prices in Canada dropped over $1,700 in a single month recently. The 2022 and 2023 off-lease wave has flooded the market. Over half of used EVs now sell under $35,000. When BYD arrives with new vehicles at $25,000 to $42,000, used EV values will face even more downward pressure. Gas vehicles aren't immune either. Gas prices have surged past $1.97 per litre. The cost gap between charging an EV at $23 to $54 a month versus fueling a gas car at $165 to $230 is widening every month. As more affordable EVs enter the market, more buyers will switch. That reduces demand for gas vehicles, which pushes their resale values down across the board. The impact on the broader Canadian car market will be felt long before BYD sells its first vehicle. The moment BYD vehicles appear on dealer lots, Toyota, Hyundai, Kia, and GM will have to respond. Price cuts, better financing, more features at the same price. This is exactly what happened in Australia within 18 months of BYD's entry. Canadian consumers benefit from the competition regardless of whether they buy a BYD or not. The average Canadian spends $1,373 a month on car ownership. If BYD's entry reduces that by even $200 a month, that's $2,400 a year back in people's pockets. Across millions of Canadian households, that's a meaningful shift in cost of living. The first BYD vehicles on Canadian dealer lots are expected by late 2026. Full national availability with a complete dealer network is projected for 2028. This story is far from over. We'll keep covering every development as it happens. Are you waiting for BYD or buying something else? Drop your plan in the comments.